Okay, welcome to another quick tech video, and today we're going to be looking at the REA Group. So REA Group is a really not a software company. It's directed at the property market in Australia. So the REA Group owns realestate.com.au. So it's a very frequently used website by buyers, renters, and agents. If you ever buy or sell houses in Australia through an agent, you probably have to go through an agent. They always have a package where they advertise on realestate.com.au. Its competitor is domain.com.au, so that's another one. But pretty simple business to kind of understand, and that's what you want to look for when you invest. Is look for businesses that you can simply understand. So for example, if I ask you, what's this business about, you should be able to tell me in probably one or two sentences, preferably one, because it just means that the business is focused, and when it's focused, it's more likely to have a singular goal, and it works toward that goal. So, what is realestate.com, or what is the REA Group about? Well, it's about it's really it's a software company that helps people to advertise properties, to buy, to sell, or to rent. And it should be as simple as that. If it's really complicated, then you kind of wonder if they are focused enough, like management. Anyways, let's have a look at that. So let's go to investing.com, and again, let's go straight to the ratios. All right, and this time, all right, so P ratio 170, industry is 108. So with P ratio again, uh, like the sweet spot, so I'm doing air quotes here, is 15 to 20, but really you got to account for other factors such as are they a growing company? Because if like they're kind of like a company in the growth phase, they might have a larger P ratio just because people are willing to pay that premium on top now, and hopefully get back the the investment return on investment later on. And a friend of mine, a good friend of mine, told me about that. So that's a really good point, because not it doesn't mean every company with 15 to 20 is P 15 to 20 is a good company, because there must be a reason why the price is so low. But that's why P ratio is not the be all and end all of like investment analysis. It's one of the indicators that helps you to determine if this is a good company or not. Anyways, 170. It's a little bit higher than the industry, so we'll keep that in mind. Okay, and let's go straight to quick ratio. Again, this company has no quick ratio, so we're gonna have to investigate why there's no quick ratio. But from the current ratio, you can see it hasn't got a lot of cash. All right, so that's pretty much what we'll look at there. Next thing we want to look at is I usually want to look at the cash flow, because it makes sense. You look at the quick ratio, and then you want to look at the cash flow, because quick ratio related to cash. All right, so cash from operating activities. Let's go annual. So yeah, no, it's looking good. It's making money year on year, and this is one of those companies that if you have a broader idea of what the Australian property market is like, you can have a good grasp of or why their operating activity, cash from operating activity is increasing. Due to the pandemic, the Australian government being helping out the Australian citizen by giving out job seeker allowance higher than normal and a lower interest rate, and really trying to push the first homeowners. So so prices of house actually gone up instead of going down, even though like a lot more people don't actually are actually not working. And because of the lower interest rate, people want to take advantage of that and go out and buy houses, and it's actually pushing house prices up. Well, initially, when during the first initial stages of the lockdown, there was a slump in prices, but I believe Melbourne now is like 10% up. So that's good for those who own properties. But that's one of the thing. When you're investing or finding a company to invest, you gotta pull all the knowledge that you have of things that you know around you, and things that you experience. So I'm a homeowner, and I want to get investment property, so I got that extra knowledge. So it's always good. It's actually it's almost like the key principle is to invest in what you know. All right, so let's have a look. Net change in cash. Oh, fantastic. Look at that. $84 million up for the past 12 months. Cash from investing. So it's investing in a lot of money in something. Capital expenditures, other investment cash flow items. So probably out of the scope of this video, but you probably do want to have a look at what these capital expenditures. Financing activities are really good actually. Is paying back debt. So let's see financial cash flow items. So the most total cash dividend paid. So it's paying dividends. Shouldn't reserve stock debt, and it's then paying back debt. Good sign. All right. So looking good so far. Next thing, let's have a look at the balance sheet. Okay, so cash, it has tremendous amount of cash, which is fantastic. Let's just quickly pull up a calculator. Always good to have a calculator when you're doing these kind of things. And current liabilities is $317 million. Wow, so doesn't really have the cash to cover the liability, so that's one downside of it. Total liabilities, total equity. Okay, yeah. So, that's total. Yeah, total current liabilities. So the reason why this is not favorable look, because you want to know if they have enough cash to cover their short-term liabilities. So within 12 months, let's say the creditors, the banks, comes and say, hey, we want our money. Um, you want the company to have enough cash to cover those short-term debt. So that's not looking good. But you know, uh, in the very extreme cases, like I don't think that's very likely that the creditors all come at once and say, we want our money. Okay, so we got long-term debt. I'm gonna turn off these videos. There's a lot of advertisement on investing.com. I guess that's their form of investment. Advertisement. So yes, cash equivalent, short-term investment. So there's not enough to cover that. And you can't really look at the total asset and say, hey, you got more asset than liabilities, because you can't just liquidate these assets. You got property, plants, like let's say a mining company would have trucks and mines that it just can't liquidate. So to liquidate is to turn asset, so tangible asset or whatever, like non-cash asset into cash. So it doesn't. You can't. When you're looking at these kind of things, you have to look at the cash on hand. Okay, so that's pretty much it. So that's okay. That's probably why there's no quick ratio. Income statement. quickly look at the revenue. Revenue dropped into 2020, but it's still, you know, it's so this is probably during the boom, the property boom, or just towards the end of that. So making a lot of money, making a lot of money. So when you're looking at these figures are not sufficient. You have to read the annual report and find out like why has these figures changed the way they have. So there's a lot of things that you have to look into, and numbers don't tell the full pictures. They tell the quantitative side of the picture, but you want to look at the qualitative side also. Like sorry, let's say the company um, is has a huge amount of cash reserve, but a lot of that cash is from borrowing money, and not a lot from operating income, and you kind of have to worry when that happens. And so you have to look at the pictures and all the details, the fine details. Okay, so this is the annual income statement year on year. Yeah, not bad. It's definitely a drop since 2019, but I think doing pretty well for itself. Uh-huh. And let me see. Oh, the net income before taxes, net income after taxes, net income. Here we go. But the net income has actually gone up since last year. It's gone down since 2 years ago. But then again, there must be a reason why it could be. It's not much, 7 million. Um, could be so many factors, like, and you want to look into that, and it's not part of this quick take. All right, so that's so I'm 60% in on this company, maybe 60 to 70. We'll find out towards the end of this. All right, so that's just the ASX, and let's have a look at the charts. All right, so like I said in the last video, when I see these kind of graphs, charts, or trend, I get a little bit worried. Let me see when it was listed. So it seems to stop at 2009, 1999. Wow, they've been around for a while. There you go. 2009, 1999. Let's quickly look. Yeah, no, oof. All right, 1999. How many? 84 cents. Swimming. You'd be laughing if you bought it at 88 cents. Anyways, yes. So, but this is a really good something for me to show is that you want to catch a company around, that's probably too much, around this part, just before it entered in its rapid growth phase, and that's why graphs like this scares me a little bit, just because is it is it starting another growth phase, and you got to look at the market, like how is it going to, as it captured most of the market, and like is there another market that it can expand to, and you want to know these things, like let's say if it's only in making software for property market, so there's only so many houses that it can um, so many houses people who are willing to sell, so there's only, how is it going to capture more share of the market, or is it going to diverge into new market? And the problem with diversification is that it's not focused. Again, you want to go back to that idea that can you explain what this company do in one or two sentences. So from the look of this one, it looks like there's a big hype. I think people say, oh wow, here's the pandemic when it happens, and then people was like, oh, bounce, it will bounce back, and it did, and it's gone way up, and people, it's just a hype. So if you're a swing trader, I think you can, or momentum trader, you can really ride that momentum and make a pretty penny for yourself. But me, it's just so, it looks really overpriced. And what's the definition of overpriced? Um, where is it? Then you can work back from present day value and stuff like that. But that's, again, this is beyond the scope. This is more in line of like, can you analyze a company in 30 minutes and work out if you want to buy it or not? It's always not the best idea. You want to kind of know the company intimately, know its governance. So, the people in charge, what experience they have in the industry, what can they bring, and, and what's the vision value of the company, where is it heading in the next 5 years? So you want to look at, and then you got to bring in your own expertise. So, what do you know about the industry they're in? So it goes back into that ideology, like principle is like know the company you're buying. Anyways, so look, let me just quickly again just draw the Fibonacci retracement and have a look see. Probably don't need it that much. I'm just gonna reduce that to 1 day. Okay, so it seems like let's draw from here then. So all right, so look, it's yeah. So it broke out here and it went all the way up. Um, I wouldn't buy it here. I wouldn't buy it here. And if I do really want to buy it, just in case it bounced back, I will put the minimum. Down here, I'll probably double that minimum. So this is at the 50% mark. Let me just pull that over a little bit. There you go. So, all right, sorry. So that's at the 78% mark. I would buy that there, minimum. If it goes to the 61 mark, I would buy that double the minimum. Here, yeah, you can double the minimum here, or just put in another minimum lot. If it go down to here, or here, you can put, whatever you feel comfortable at putting. So, if it goes down here, it's go down the like just the at the turn of the pandemic into the pandemic, so just pre-pandemic. Don't think it will go down here. That's why I would say again minimum, double the minimum, double, and you can double the minimum again. Now, what I'm saying here, I'm not meant to be advised to buy or sell a company. You have to do the research on your own. It's purely speaking in terms of what I would do. And one of the things about investing and trading is that you got to go against what the consensus is sometimes, because that's where you find bargains. If you hear it in the news, and what I do is something I call a front page test. I would go to some of the popular finance website, news website, and have a look. If it's on the front page of that, I just do a quick Control F find. And if it's on the front page, you're probably too late. Unless you're a momentum trader, you might get a few bucks out of it. But that's not what I really do. So, and I don't really recommend it because you want to you want to understand what you're doing and make it repeatable. That's how you grow your long-term wealth. But yeah, so conclusion, wouldn't buy at this point. I'll buy it at the $130 level minimum and see how that go. Just because it might be coming at the end of that rapid growth phase, so it may be towards that kind of like the plateau, and then it's just kind of string along. And what you want to do is put your money in those companies that's before the rapid growth phase, because there's a lot more upside. This to the when you invest in. So let's use this as an example. You want to invest somewhere around there. There's a lot more upside, right? The downside is, you know, if you put $1,000, you might lose $1,000, but that $1,000 can, what's that? 151 divided by 20. No, yeah, that's right. 150. So that $1,000 can become $7,000. It doesn't sound much, but that's you're winning. You're $6,000 up. So yeah, that's pretty much it for this episode of Quick Take. Please leave a comment if you like this video. Please leave a like if you like to comment on anything. If you like to correct me on anything I've said that might be wrong, or if you like to chime in regarding this particular company or any of the company I've done, please do so. But please be respectable to those around you, and we all have a lot to learn. And if you like what you just watched and you would like me to do analysis for more companies, just comment on what company you would like me to do analysis next. Most of the time, I do it on recommend my own kind of interest. Sometimes a friend would recommend a company, and I would do a analysis on that company. That's pretty much it for today. Thank you so much for listening in and watching. I hope you guys and gals, happy, a successful time investing and trading. Cheers.